Welcome everyone to a new video on the Alien Alga channel. I already posted on Twitter that I will be making this video about a clear confluence I use within my trading to find which side the main bias should be. And this is called, I don't know if it has a certain name, I call it bull-bear invalidation. And with an invalidation, I am assuming you guys know what a regular stop loss is, how people set their stop losses. Let's think of it like this. This is a perfect example. Here, people most likely went long with a stop loss somewhere here. And the price rose further. Okay, so now we already knew here the bulls were in control. And then you get this bit of price. Let's first pick this. We knew the bulls were in control right here. Okay, why? It's quite simple. When you think about it from a market maker perspective, they want to risk as little as possible with as much upside as possible. Okay, so what does every trade need? A clear invalidation. The same goes for market makers and the big players who move the markets, right? They also simply need a clear invalidation for their stop losses. Let's pick this point, okay? Here, I went short. But why did I went short? Why did I expect the price to go down here? If you just simply look at it from this bit of price, so let's just say everything to the right doesn't exist, okay? You simply put a long position on TradingView, you find the stop loss. Now, you get the long position at the same exact time. I'm going to make this as simple as possible, okay? So, the long position would be right there. I need to take the short position instead here. Okay, the stop loss with a clear invalidation at the high. And now the long. Let's just look at the long. The same exact place. We put a long. Where would your stop loss be? A logical stop loss. It almost needs to be either here, but this looks, when you think, okay, what's my potential upside? The recent highs. Okay, this is a shit trade. Okay? And why is this a shit trade? Because a proper stop loss on a position like this will be something like this. Okay. Now, look at this and this one. Which side has a better invalidation? Because to have conviction in your trade, to put on a lot of size, you need conviction and a clear invalidation. Here, the invalidation for shorts was way better than for longs. The same would be, even if price was here, your stop loss still needed to be around here or here. So this is still a shit trade. So just looking at only this little bit of price, these two, the bears had a clear invalidation at these highs. While as a bull, in this part of price, your invalidation will be somewhere around here. So from this point on, you can simply almost assume that the bears will be stronger because their invalidation is way cleaner than the longs. Okay, let's look at this little point. Who would have a better invalidation here? Shorts or longs? Let's apply the same logic. Okay, I'm quickly gonna remove this. And let's just think this hasn't happened, okay? We have our level right here again. And the reason I can point these trades out so quick is simply I took them. So I know my past trades. This is just another account with no past data on the charts. Okay. Here you have your key level at the downside. Let's look at our key level at the upside. Will be this, okay? Now, let's apply the same logic. The stop loss for the bulls will be somewhere here. Looks like a decent trade, right? We didn't know this happened. So, let's find out who will most likely be in control here. The invalidation for shorts. In this case, it looks shit. Okay, if we just put it like this so it doesn't overlap. Who has a better invalidation here from a market making side? The bulls or the bears? Here, obviously, the bulls. Their stop loss is way tighter, around a clear level, and the bulls ended up winning. Okay. Now we will be looking at the recent top, this one. Who was in control here? Or who can you expect to be in control here? Let's find your major pivot points again. Okay, this one. Right? And here you had this previous resistance. And if I remember correctly, looking at a macro, this also was a macro level, I think. Yeah. Came from this point. And let's do the exact same exercise, yes? Looking at this part, this big wick hasn't happened yet. Let's just look at it like this. Price is here. Okay. Who will have a more clear invalidation within this area? Or even already here? The longs don't have a proper stop loss. The longs, if you just simply look at it from this perspective, even if someone longed this, either this was your invalidation or this. But let's just look at it from the way I like to look at it. Where price currently is, we put the long bracket, we search for the proper stop loss, we target the high, shit trade. Again, it's shit. There's no clear invalidation and the possible profit is really tiny. Now, let's apply the same logic with a short again. We put it at the same place. Okay, a little bit more towards this side so it doesn't overlap again. Even with having a literal shit entry, because this of course had that stop, but whose invalidation was more clear here? The bears, of course. And who ended up winning? The bears. And this concept of course can be used for all the time frames. Here, obviously the same. Who has a more clear invalidation? Let's just remove all of this real quick. Okay, this point of price. I'll quickly look at it on the 4 hour for now. Again, here. Who has a better invalidation? Which side? If we will be looking at the price like here, for example. From breaking up, maybe this would have been your target. But for a bear, if they went short, This, or this, was a clear invalidation. The target, of course, towards some liquidity on the other side. Okay, let's look at the bull side. Let's just say even as a bull. You had a decent entry this time. You even had a better entry than the short. What would be your invalidation here? I can't seem to find one. It would either be this, but that's way too risky and not that good of a trade. Unless you played it with like very high leverage. But it's quite simple logic. Who has the better invalidation? Which looks like the better trade? The short. Okay. I will try to find the last point real quick. Okay. Let's look at it from this side. Okay. Imagine people confirm this as, okay, price is breaking down. Look at it from a long and a short perspective. Would there even be a reason to short this? No, of course there won't. This would have to be your stop loss. And you don't know if it is actually breaking down. So, then we get the long position again, and we apply the same logic. Here, you have a proper invalidation. These recent wicks, or even previous points from here, would have been your invalidation. And this, they just didn't have a clear invalidation. And the concept you need to get your head around is, to move the markets, market makers need to play with size. They won't put big size on a trade that they don't like, where there isn't a clear invalidation. So if for bears here isn't a real clear invalidation, they are not taking positions. And the bulls will win. At least for the short term. And maybe, for example, here. Here already was a way better. Yes. Here, if price went up, now you would have a pretty decent invalidation. If we just look at it from this perspective. Let's just say you entered here. This is quite a clear stop loss. Quite clear. Okay, and you see this price started moving down. This is just a way, because the TPs and the etc. that I put here, I don't trade exactly like this. I only do this to find my buyers. And I thought about this trick of using the long and short position to make it a little bit more clear for everyone. But I just look, I think when you try this multiple times and you use it multiple times, you just find the pattern really quick. Because for me, let's just go on to the 5 minutes. Who has a better invalidation here? Longs. Support, support, support. Previous starting point of the bounce. And for a bear, his invalidation would have to be here. Unless price comes here. Now, the bears probably have a better invalidation. If the price is here. But the price is down here. So, applying the same logic. Would target a previous liquidity point again. Which looks like the better trade. Who has a more clear invalidation? The longs. Here is a clear support. Unless, like I said before, the price comes here. Now you're more close to a resistance. So for the bears, there will be a better invalidation. I hope you guys can get your head around this concept. If you would like for me to look at anything else, this will be the second part of the beginner to master series. Next up will be more detailed levels. Like you have seen me draw, let's just go back to the 1 hour chart, the 1 day chart, and I'll show a quick example. It's a thing I like to use a lot. Okay, let's, for example, look at this. We identify the downtrend, so we want to be looking for shorts in this case. This was where you rejected this exact point. But where do I take my entry? Do I do it here, 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 or when it breaks down and clearly rejects? There comes a fun thing. I get the Fibonacci retracement, and I see it's on the wrong settings. 1 second. The beautiful slaughterhouse. Okay. I will remove the extension zones. I only want the regular slaughterhouse right here. Okay, these are the settings. The 0 level, the 1 level, the 0.25, 0.75, and 0.5. What this does, it gives you the midpoint, the quarter point, etc. The numbers we just named. You simply get your level that you just drew and you put this on top of it. Okay, now let's zoom in. Now we have identified our levels. Look what happened. Entry, entry. Okay, possible late entry. But here you already see, because you could have also shorted this. Or this. Wow, this was your best entry. Or this point, which is getting pointed out right by the slaughterhouse. This logic I will go a bit deeper into on the next video. This was just a short sneak peek of how I use these type of Fibonacci levels to make a support or resistance level even more accurate and giving me a stronger bias on that certain level. Without more said, I think this should be it for this video. And like I said, the next video will be getting into more detailed levels. Simply this logic, but I will get into this in the next video. Stay tuned guys, keep trading, and have a nice day.